I want you to describe what your trading edge is as quickly as possible.
Okay. Well, the way I look at it, we all know the statistic 90% of traders fail or whatever. So I think that basically comes down to a human problem rather than a strategy problem or anything else. So I think one of the biggest edges can be found in not succumbing to these human emotions. That's how you'd be different from. That's how you're different from everyone else.
Can I interrupt you then? Because you've already fucked it up anyway.
Sure.
My first reaction, and this is not me like trying to be rude or something. I kind of just realized this as you said it. Like, well, that can't be true because it can't just be a human problem. There are plenty of algorithms that don't work. Like there's so many trading bots and stuff that are just losing strategies. So there's no human problem there. You switch on the bot, you don't have to do anything, but they lose money. So there must be more than just that. It's not like you can just trade anything as long as you do it consistently, or
Do
you know what I mean? Like
okay. Do you think there's more? Do you think humans lose more or bots lose more?
yeah, humans have more is it valuable or whatever the word is. It's easier to make mistakes, obviously, but if you don't have a good foundation in the first place, then it doesn't matter. You can yeah, I'm sure I said this before. You can perfectly execute a really bad trading strategy, and all you'll be doing is consistently losing money.
By not succumbing to your emotions, that can be an edge, right? Not revenge trading, not
Yeah,
chasing the market, not
yeah,
having FOMO, fear. There is an edge in that because markets probably are mostly driven by fear and that kind of stuff. So by
yeah.
not doing that, you probably get an edge off the bat. Yeah, you need a
Mm-hmm.
strategy, and yeah, there's robots that fail as well. But I would guess most of the algorithms that are failing are maybe just in a testing phase, or if your algorithm's working, you leave it, and it's not going to fuck up through emotions. It's not going to have a day where it just goes mental and wants to revenge trade because it just had a big loss because it sized up and then it lost a lot. So then it wants to get back.
Well, no, but there are bugs, and that's kind of the same thing. It's easier probably to fix an error in code than it is to fix a human condition problem.
Yeah. I mean, okay, so besides the.
Well, okay, sorry, I wanted to say because I think this is why I really like that trader, what's it called, Alpha Trader book, because it was the first time where I realized that yeah, trading is a complex thing, many different factors involved. Like there's a part in the book where is that you have to know market microstructure of the market, you have to have watched that market, and then for years potentially. You have to have risk management, you have to I don't remember all the factors, but and all those things are an edge. You have to have a knowledge of technical analysis. You have to. So it's not like you can just be like, yeah, my edge is I like have a really good trading strategy. No, because then you could, fuck the strategy up. You could write an error in the code, or you could just be too emotional, or you could be a robot, but you have a shit strategy and therefore it doesn't work. So you need to have a good strategy. You need to be, like able to handle your emotions. You need to know market microstructure, how to position size, how to manage risks, drawdown, blah, 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 how to analyze charts. It's like a multitude of things. So maybe it should be like, what are your edges? you know?
Yeah, I agree with you, and maybe I started in the wrong place. I just started with one of them. I was going to move on to uh, obviously risk management, and also understanding about consistency. This is all kind of woolly stuff. Not being a human, managing risk, being consistent, not just in trading, but in your life in general. That helps you stay consistent in the market if you've got a consistent routine. and just your approach as well, being process oriented, not results oriented, because you can make money from bad trades. And finally, I'm getting onto the strategy. Like, I agree, it helps certainly that you're not just coin flipping, that you have a good strategy that's back tested and seems to work. Have a positive expectancy over time. But that, I believe, that isn't the hardest bit. That's why I left it till last. And I think, well, I've heard on Chat with Traders, or I've never been to a prop firm, but apparently, you walk into a prop firm and you're given strategies. They're a dime a dozen. Yep, this is a strategy, it works. But can you trade it? No, because of the human shit. So, in terms of edge,
but it's a good point. But that's the point, that you walk in and they give you a strategy that works. If you walk in, well, maybe they put you on demo if they don't give you a strategy, or I think they even put you on demo when they give you a strategy, right, to see if you can execute it. So that makes sense. But the point is, you're not coming in and they're not saying, just trade anything, but just make sure you do it consistently. They narrow it down. Like, here's one that works. Now use that.
Yeah, so you do need the strategy as well, of course. I've maybe gone too far the other way there, because started off just being fucking strategies focused for the first 2 years, 3 years, I don't know, 2 years of my trading journey. But now I'm thinking, it doesn't matter, just buy and sell.
I think I've influenced you there a bit, actually, because I was saying, like, it doesn't matter. You could almost coin flip as long as you have risk management, which is true. I still believe that, but that would be like a very small edge, I think, and then you can like add to that edge by maybe. Obviously, also my beliefs have changed recently. This is not a short anymore, but my beliefs have changed too, because I was purely trying to capture the fat tail, which is saying I don't know which way it's going. I can't predict anything. But obviously, I do believe in market timing to some extent, because otherwise I wouldn't be trading. I think you have to come from your original beliefs. Like, I have this poker player friend who just for so long is like, I don't believe trading, anybody can make money from trading. Maybe some quant firm somewhere with 1 million PhDs and the smartest guys ever, they can get a tiny thing, but they have billions, so they make a lot of money. But everybody else can't. You can't time the market. You can't. Which is weird, because he's an ex-poker player and he believes in like inefficiencies and edges, and but he just doesn't believe it's possible in the market, because I guess it's interesting why. I think probably because it's so big and there's so many eyes looking at it, and like, I don't know what. Actually, that's a good question. Maybe that's a good question. Why do you think? Okay, why would you trade instead of playing poker? Why do you think trading is a better way to make money than playing professional poker?
It's more scalable. That's the first thing. When you go up in stakes in poker, you play against harder opponents. When you go up in stakes in trading, you play against. It's the same game, more or less. Just your emotions. But your emotions are the same in both poker and trading. But so that's the first thing.
Well, that's the thing, though. I don't. Sorry to insert again. I don't think it is, though. Right? I mean, definitely for sure what you said is true. But then, some point, I think we've discussed this too. Like, when you trade in larger amounts, you're playing a different game, because you can't just enter and exit the market. I think that's probably why we can assume that big hedge funds and stuff are not using TA, because, like we discussed a few days ago, the big traders, maybe they don't even use stops, because imagine if you trade in huge clips, you don't really want to have a stop, because you don't want to get knocked out. And the reason is because you have a longer time horizon, so you don't care about the small fluctuations. So then if you have a longer time horizon, you probably have a different strategy, a different way of looking at the market. Like, I think it was in the market, not the market, was reminiscences of a stock operator. When he got bigger, he started trading against the sentiment. Like, if he would be in a position, and if let's say he's short, and if some really bad news comes out, he would be buying back. because of all the people that are now selling, panic selling. He will be buying back from them because he had to use his huge size to his advantage. So like as a retail trader, small trader, you might be selling into panic news to capture that small divergence and quick move. But then when you get really big, you'd be probably buying into that.
Yeah, for sure. But I still think, what I said is still true though, right? There's a difference between poker and trading. To an extent, like if you want to,
Do you think trading is harder than poker?
Yeah, I think it is. I think it is because it's more. There's more freedom to it. Poker, you've got pre-flop, flop, turn, river, and you've got cards in front of you, and you've got opponents. So there's only a finite amount of things you can do. You can't go all in, then then cancel that, then go all in again, then cancel that, then lose a load of commissions doing it, like you can in trading. Trading is a lot more free form. Continuous rather than discrete kind of options, I guess. So there's a lot more room for error, a lot more places you can fuck up when trading, a lot more ways your emotions can get the better of you. Poker, you might lose a hand and you're tilted for the next hand, but you've at least, if you're playing live, you've at least got 30 seconds while the dealer deals, and you can at least, or if you're playing online, it's a bit quicker, but it doesn't come round to you straight away. You maybe got a minute or 2 minutes before you have to make another decision. You can't do anything. You're locked out. But trading, you can just jump straight back in a second. So you've got less safety measures in place, if you like, for tilting, for succumbing to your human emotions. So that part of it is harder. But maybe I don't know the strength. But then poker is harder in terms of you're playing against in the trading you're playing against good people as well. But when you go up in stakes in poker, maybe I'm not the best poker player in the world, but you get to a point where you feel like you just got no edge left. Like you just feel when you've played thousands of hands against, or tens of thousands of hands at this stake, you just feel like, God, these guys are just owning me. Like when they're balancing their range properly, and even there's no more timing tells, or it's just kind of tough, and all you can do is the same back to them, and it's like you're just battling over just fractions of edge, and you just wait for a fish to join the table, and you want to play against that fish, and you just want to not really have a big conflict with the other regulars. But yeah, that's what it comes down to, and table selection and seat placement is everything when you start getting up the stakes in poker, because you want to be on the left of a fish. So you act.
That kind of sounds like trading in a way, but like selecting tables, it's almost like selecting your market. Well, I guess your market and your trade, and it doesn't directly. It's not a direct analogy, but it kind of works.
Yeah. It does a little bit, like markets conditions, selecting your conditions. Basically, that's what you're doing in trading. You wait for the conditions to be right. In poker, you should only join weak tables or look for edges. If there's just like 5 regulars sat down, you don't really want to play with them.
Right, and that's actually, I'm hijacking the question, but that's what I'm looking at now in terms of market environments. Like I had the volatility aspect. Then I realized that I was looking at sentiment, but like anecdotally. So I'm trying to look at that more kind of more algorithmically, like with the sentiment indicators. So that's kind of like picking your market, but it's really not. It's not linear. Like you can't just be like, oh, sentiment's greedy, so I'm gonna start selling. Or like volatility is low, so I'm just going to start like buying breakouts. It's not that simple, but it's definitely a good start to be like, okay, I'm going to trade these kind of environments. You know what is interesting? You sent me that video with Dante, trader Dante. Who, by the way, I realized that I used to track him. I think I'm sure it's him. He had the same accent because I had some voice
You used to
recordings and
track
stuff from
him.
him.
You stalked him.
I mean, I used to see him on Trade to Win. It's a forum,
You
like
went
one of
through
the
his
biggest
bins.
trading
Oh
forums.
yeah, trade to win. Yeah, I've
Yeah,
heard it.
yeah. But the thing is, I don't know if it's the same guy. I think it must be though. He has the same accent. When I heard him, like he threw in some voice recordings. He used to trade at Futex. He was at Futex at some point. But also at the time, I used to think he was a bit of I don't know if he was doing this on purpose to prove a point or what, but he used to exclusively trade pin bars. That was his whole thing.
Hmm.
Like the candles. He would be like, every time there's a pin bar, he'd post it and be like, all you need to be a profitable trader is pin bars. And like every time there's a pin, doesn't matter, look at every market and just wait for a pin. And when you see a pin, buy or sell. I'm like, well, I mean, now looking back, at the time I was like, what? You can't just make money from pin bars. But then maybe the point is about having like one strategy that you trade consistently. I don't know what the point was, but just didn't sound like something that a guy trading at Futex would be doing, you know?
Yeah, I never realized he was at Futex, but that was
No,
pretty.
maybe he wasn't.
It was a pretty cool story. It's probably embellished a
Yeah,
little bit.
well,
I don't know. It's like, but it's still cool for context. So, Tom Dante was trading, and Navinder comes over to him and asked him if he likes his position. And he says, "Yeah, yeah, I like it." And he goes, "How much do you like it?" And he goes, "Yeah, yeah, I fucking like it. I really like it." So Nav reaches over and puts his full size in. And he says, "If you like it, size up," or something along those lines. Tom told that story a lot better than I did. But he got
well,
some
I
truth.
loved it. I thought it was like something from a film,
Yeah.
and it sounds like something he would have done because he was autistic or he had Asperger's. He wouldn't, like, obviously you shouldn't do that to somebody. It's just not polite. But since he was like the king of the floor at the time, it does make sense. But what's interesting is it perfectly aligns with something I was thinking about a few days. I wrote it down. It was more like one of those kind of abstract ideas. Um, like the opposite, like of an edge, I guess. Like, what is the biggest killer of a trader? And for me, the first thing that came to mind is uncertainty. Like, you don't know, like, is the next trade going to work? You don't know even if your strategy is going to work or if it does work. And maybe you don't even know in the bigger picture, like, are you going to make it as a trader or are you just going to fail? So, and then like, what is uncertainty? It's risk, obviously, and everything in the market, all the profitability and all the moves and everything comes from risk, like rebalancing of risk, people mispricing risk or not properly anticipating risk. And then when I heard this story, like how he comes over and unloads like his full margin into, and then I really wanted to know, what did he do? Did he was like, oh shit, no, I don't like this trade, and then closed it? Because that would be interesting if he did. Or did he just reduce back to his size and trade the original position? Because it would be an interesting experiment. Like every trade that you make, would you go all in on that trade or not? And obviously it's not a good idea to go all in on every trade because eventually you'll blow up. But looking for that Kelly criterion was the optimal bet size. So it makes sense for people. For me now, as I develop my strategy out, I'm not just looking at the fat tails. Now I'm looking at also the volatility and then maybe like these news, equilibrium, stuff like that. And so when I see a confluence, okay, the point is you can never have complete certainty, but you can have conviction, uh, and bet size is a way of expressing conviction. Where does the conviction come from? I think for me, it's coming from, well, obviously you can just be like a moron and be like, I feel this is the one, or it can be like confluence of strategies
Experience.
or
And yeah, just sensing it
yeah.
almost. And I've heard this from multiple times now. I've also heard it from that Brannigan Barrett. Is that his name? Brannigan Barrett from Axia Futures. He's on Chat with Traders. He said a trait of successful traders, they always seem to have a lot of size when it's going with them, and they always seem to have very little size when it was going against them. It's, they've got a funny knack of doing that. And now Nav is
Yeah,
saying this,
and just to clarify, that doesn't mean that like in that story you need to go all in on each trade. It can actually be even in terms of your strategy. Like when you're in a drawdown, it's common to lower your size and you're trading smaller, you're less confident, but then you can work into a position. And I think Nav particularly did that. If you read that book, Flash Crash, when he had that one big trade that kind of made his career. I think he made like 16 million quid in 2 days. What happened was he was in a trade. I have no idea how, what, maybe it was some order flow analysis, but it went his way. And then like some big fundamental news came out, like, I don't know, the central bank said they were going to do quantitative easing. So then the market like skyrocketed. And instead of just taking profit, he actually took, from what I understand, all the profit he made and did like a new bet. So he basically like, it's like taking his winnings and putting it all in again. And then, and then the market went up another day and they ended up making, I don't know what percentage return, but he turned, a few 100,000 into like 60 million. So the point is, he wasn't like he was like, trading, just went all in full account size, kind of was working in. And when he kept getting more confirmation, which is a scientific process, like, okay, this is working, I'm going to add. And then you got to have the balls to say, I'm willing to risk everything I've just made to make a lot more.
Yeah.
Which is very scary, but I think it makes sense.
Yeah,
logically.
you only have to hit it once, don't you? Was one time. Yeah, a lot of the times maybe you're going to just lose it, but one time you're going to just get that exponential hit.
Yeah. I definitely experienced that at the beginning of the year. This is why I was thinking like, what, and then it really fucked me over, but I thought I'd made it because that was a new element I added into my strategy. Fuck, I can't remember how to phrase it. Changing the bet size, dynamic bet sizing and conviction and stuff. And I had high conviction. I wasn't even sure why. I mean, I'd been working on different elements, but it was partly feeling. I mean, obviously it was my strategy, but the other elements that I couldn't quite figure out. And the fact that it worked out and I was fully loaded up and I made over like 100x in a month at a big size. So it was a lot of money. And I was like, oh my God, I've done it. But the problem is, then I kept trading like that, thinking I'm a genius. Now I can just trade big and I can predict every move. But the reality is those moves don't come every week. They come a few times a year in my case. So, but yeah, it is interesting. It's like almost like a lot of and I've heard this with, it's not just traders, but a lot of the like global macroeconomic investors and stuff, they seem to have a trading mentality too, that they don't like diversify their portfolio into different aspects. They have one to three big bets, and when it's working their way, like they load up more.
Yeah, I think it's a real key to it all, and it makes perfect sense, And it's another example is this trader Lakai. He always says when he's up, he keeps pushing. When he's reading the market, when conditions are good, and he's just had a good profit, he keeps going and he's more aggressive. Because it's the same as what you're saying. Because there's that YouTube video where he was like something like 1.4 million up and then lost it all and then back to like, I don't know, 100k or whatever. It's still a very big win, but relatively speaking, he just lost. But it works out for him because it's what you should do. A lot of people as well. A lot of people do this in poker. I had a friend. It's a really bad thing to do. If you have a good morning, like you're normally playing like hour sessions or 2 hour sessions, and you have a break. If you have like a really good morning, then you just take the rest of the day off. A lot of people do that. The same with trading, but you should not do that. You should, poker, it's not as the same. But if you're on a good table, you certainly shouldn't leave that table. If there's a fish on it that keeps donating to you. But if you've had a good morning in trading, you're feeling confident, you're reading the market well, the conditions are right, you've got no reason to stop. It's tempting to stop because you just kind of had a big win and you just want to chill out, but you shouldn't. You should actually press the gas pedal harder. And yeah, it's again going
Well,
going against kind of common feelings, but
I played a bit of poker. I was never very good, but I did find it interesting. And I did try to kind of study strategies and stuff. And when I played, obviously it wasn't just recreational. I wanted to like win. But I noticed often that like if I was sitting at a cash table, and I like to play in casinos because I felt like it was more interesting, and also the element that you mentioned before of being slower gives you more time to kind of think it out. And also the fact that in casinos, a lot of people are usually there to have fun and they're
yeah, yeah,
drunk and you can see them. You
softer
can see
games.
who's getting drunk. Yeah, you can see who's the guy on holiday, like shouting and drinking and ordering. Online you can't see that. So I felt like there was going to be an edge there. But what I noticed time and time again, and I don't think this actually makes any sense, maybe it's a gambler's fallacy, but like when I was playing well, I would keep going and like it was almost like trend following with the pots. Like if I was making big pots, I would just keep playing. If I would or I even had it in like a kind of rule of thumb. Like if I lost like more than half my chips or like 50 times a big blind, like in one game or in one session, then it's not a good session. I walk away. But if I start making, then I just keep playing until I get too tired to play.
Yeah, you've
So
definitely
maybe
got
that.
this super. I call it a superpower, but you've got this like because what is perfectly natural to do is actually the opposite. And if you just like make 200 euros in the first half hour, you kind of just tie it up and you just get the free drinks. You just chill. That's what most people do actually, and even professionals. The game keeps going if more people are down. When they're down, they want to chase it and come back. But when everyone's up, they're kind of just chilling and playing tight. Or it's so you do the thing that you
Okay.
probably should be doing, which is putting your foot down when you're winning. It's not such a good idea in poker because it's you got to still play the cards and play the people. If you're still sticking to your plan, you're not just kind of crazily just gambling. You're still playing proper poker. But trading certainly you can, yeah. But
But trading, it makes more sense, especially if you're using like trend following like I am, because if the trade is going in your favor, that's more confirmation. And then if you get another signal, but then it becomes it becomes more of an art because what do you get your long market's going up, you're in the trade, you're right, you move your stop, then you get another signal. Do you just trade like again your account equity separate position, or do you see it like the same position and maybe use the profits that you've already made to like load up and trade and risk it all kind of because then you could give it all back. I
I mean,
think doing that, and if you do the maths on it, like I think Jesse Livermore did that too. He had this like box strategy. It probably doesn't work anymore. Like it would move up and up and up. You just keep adding, pyramiding in, and you only have to capture one move like that, and you've like made a killing.
yeah. Who got a quick question for you? Who do you I don't know respect or like or who would you like to meet the most? Nav or Jesse Livermore?
Yeah, I think now for sure because he's a modern. Well, if I could be transported into the world of Jesse Livermore and like go on his yacht and like in the 1920s, that would be fun. But in reality, I'd Nav because first of all, he's English. It was the modern day. He was fighting the algorithms kind of
Well,
thing,
okay,
and he
so
just sounds like more of a character.
what would you ask him then if you met Nav? What would you ask him?
Honestly, I really I was thinking about this. I was thinking. Nav, where the fuck are you? And what are you doing with your life now? Because what a story, from nothing to
No,
everything
but
and
would you
back to
not ask?
nothing.
Would you not ask him about trading, or you're just interested in him? Like, well, all right, mate. How's it going?
Well,
Where you been? Would you not ask him like, what?
no,
How'd you become a
well,
better
first,
trader?
yeah, out of respect, I would want to know. I wouldn't
No,
be
but
like, hey,
say
give me
no,
your
but
trades.
okay. I'm not saying like you just bump into him or whatever. Say like you've got an hour with Navinder Sarao, is it? What would you ask him? You can ask him anything. You can chat to him. Pick his brains for an hour. What would you do?
Well, I think I'd ask him, do you really think you were bound to blow up? Do you think you're just a gambler that got lucky, or do you believe that you could do it all over again in any under any conditions? Do you think it's repeatable? Because he was a bit wild, as we can see, right? Like loading up, going all in. I'm not sure if he even used stops. I think there was a story where his broker called broker or whatever, somebody at the firm called him up saying like, "Where's your stop?" I'm
Yeah.
pretty sure that happened. So he was wild. And in a way, it's weird because Jesse Livermore was the same. He blew up like 5 times and then killed himself. So what the fuck is it with these traders? Like they can make, but is it repeatable? It's almost like they only make so much because they're so wild, and eventually they blow up.
Yeah, I thought about this in poker as well. Like when you play on, just to give you some context, when you play online, you can play thousands of hands. You need to play maybe even 100,000 hands before you can really see, the variance even out. If you've got a bigger edge, it can be shorter, but it's a lot of you got to play. So, and you can just get lucky. I've been sat, and it maybe takes a week to play. I don't know, 10,000 hands, depending on how many tables you're playing at once. And just for a week, I've been sucking out on people. I've been hitting things. I've been getting sick kind of coolers where I'm getting the best of it, and I'm just my profits just rate going up over 10,000 hand sample size. And in the real world, in live poker, 10,000 hands can be a lifetime. So some people can just get lucky for an entire lifetime. And they're just like constant, and they think they're good at poker, but they're just on a lifetime win streak. And maybe they try online in a higher sample size, and they just doesn't work or whatever. But that can mess with your mind. So this is kind of what you were saying about maybe some traders, but I don't know. I don't know if it's the same thing applies with trading. I don't know what I would if we exhausted that. Like, what would I ask Nav if I met him? I would ask him stuff like what, because trading is a journey, right? It's your constant journey of improvement and reflection and learning about everything. I would ask him where his biggest kind of leap forward was on his learning journey. Like, what was it that kind of gave him the biggest amount of progress? That might be interesting. Maybe I'd describe what level or what place I'm at in my journey and what I struggle with, and ask him for advice on how to handle that, or if he's been through the same thing. Okay. I don't know the exact monetary value, but let's go with $500,000 US dollars. So it's maybe too high, but it depends. You'll have a price. We need to maybe work out what your price is. I'm not saying that it's not what you think. You get that out. Get your mind out the gutter.
All right, take off your pink shirt and let's go. $500,000.
All right, cool. No. Okay, so if I offered you $500,000, but your memory would be wiped, like Men in Black style, right? So all your trading experience. So anything you've ever learned through trading, you'd forget. You wouldn't know jack about trading. I mean, arguably, wouldn't be much. No. So you wouldn't know anything about trading, but you'd get 500K. That's option A. But option B is you get 1 year access to the world's top traders. Nav can be in there as well. Anytime, 24/7, you got access to them. You can ask them anything. They can mentor you, and you can learn from them. You can pick their brains, be their best friend. What option would you go for? I think that question was more than a short. Never mind the answer.
Yeah.
But
well, it's an easy decision because it's an easy algorithm. It's like, have you made or can you make more than 500K from trading? If not, then take the 500K.
It's kind of like do you want what? I don't know. I think it reveals a lot about you. So you're leaning towards the 500K.
I would take the 500k. I think it's easier. Well, I mean, it's just easier to take the 500k than to like, study. Yeah, of course. The question is then, are you doing it for the money or for the passion? But obviously, you're doing it for the money as well, because, I mean, imagine if the other question should be, would you pay 500k to sit down with Nav for a year or whatever? Like,
I think it reveals a lot about why you do your motivations. Because, yeah, on the first thought of it, it's kind of tapping into do you want the fish or do you want the fishing net? That's the kind of question here. And I think with the fishing net, you can make more than 500k.
So maybe, but
it's less guaranteed. That's the thing. Yeah, exactly. It's less. It's uncertain. So it's the safer option to take 500k and walk away, and you're never gonna. Well, it's going to be hard to come back from being a trader. You're going to need to put years into it again, or you're probably just not going to bother because you can go into real estate.
500k, it's so much, because I mean, then like in most parts of the world, you could live for a long time on 500k, and also you could then study trading on the side.
Yeah, but on the flip side, I'm looking, maybe 500k is too high, but I'm looking at it where I tried to pick a number where it would be kind of difficult, and for me, it's like, you could potentially become extremely profitable if you put the work in. You've got the right team around you, anyone you want to speak to, infinite knowledge and experience at your disposal.
Yeah, but in fact, what you're saying is, if you choose A, you're just in it for the money. But what you're saying is you want to make loads of money, so that you're definitely in it for the money if you choose B.
I want to. I don't know. I kind of want to beat it myself. It's kind of like cheating, just getting some money. If you just, I think I'm leaning towards the coaching option. But let's say then for 100k, is it still the same answer? Like, because you got to, for me, 100k is definitely, I'm going for the coaching, 100%.
What, 100k? Then you're starting to get into a different realm, because 100k you can't do as much with it, right? Because when you say 500, it's like, wow, you could buy a house and still have enough left over to live on, without working. And maybe you could still trade with a 10k account while you study and whatever. Yeah, 100k, then it's a different thing. So there's a price to it for each person.
But do you think if someone offered Nav, he didn't care about money, if they offered him 500k, the same thing, he would go like, fuck that. Maybe not. I think he was quite self-confident, so maybe he didn't even want either option. He'd be like, fuck off, I can do this myself, kind of thing. But maybe in his earlier years, he might. I think he would be more inclined to pick the coaching.
He would in his earlier days, but now he would definitely take the 500k.
Well, would he? Because then he's got more to lose than we have, because his memory gets wiped.
That's why I wanted to ask him. If I met him, could you do it again? Would you do it again? Because why hasn't he? If he believes in himself so much,
maybe he is.
Now I don't know what. Maybe he is. I don't know. Maybe I don't know. Look at last I heard from the book. At least he was back at home with his parents, and he's just playing his PlayStation 4.
Well, I don't know. We don't know. He's probably got a lot of surveillance. He came down on him pretty hard. Maybe it was stipulated in his agreement or whatever with investigators that he couldn't ever trade again or something like that. And they're probably going to be looking at him pretty hard. I don't know. It's more complicated than we think. But going back to the question, don't you think that says something about you or not, or do you think it's stupid? You'd give up all your years of whatever you've picked up, all your experience, everything you've learned about trading and markets.
Well, yeah, because I haven't made more than 500k, so it's like, okay, I can just take the 500k. And
no, but that's not. It's not about what you've made in the past. It's what your potential future earnings. Maybe.
Yeah. Okay. Yeah. Recently, it does say something about me, because recently I've been thinking, fuck, man, trading is fucking hard, and probably I know you were saying like, part of the reason why you come to trading is because you want to have a business where you don't have to deal with clients and managers and partners. You can do it alone. anywhere from in the world with an internet connection, and theoretically you can just add zeros. So it's but it's probably the hardest fucking thing in the world. It's like being a high performance athlete. I think there's a point where you just can't do it anymore. It's too much of a toll physically and mentally. Well, maybe not physically so much, but mentally, definitely.
I don't know if I'm an overly optimistic person, like too optimistic, if that is a thing, because I get myself in these situations all the time. Like with work, it's a similar thing. I told you about that. I put that on the table. It was my idea because I was optimistic about doing it, and I'm optimistic about making more than 500k in trading in my lifetime. I might, of course, I'm not saying I'm definitely going to do that. I might be just naively stupid, and there's a fine line. I am probably naively delusional and stupid, but it's actually, I've got to start somewhere, and this is probably a good superpower to have, of being incredibly optimistic, and that you can talk about kind of visualizing things and, how the power of seeing yourself there. But I don't do any of that because I do see myself there. I don't have to fake it. I can see myself, like, and it's bad though. It's bad for me because it's almost like high risk because I don't pay into a pension plan, or I don't care about. I haven't even thought about what I'm going to do, like in my 60, 65 or whatever. I don't, because I think I'm just going to be okay because I'm going to get there somehow. Whatever it is, I'm going to be all right. And I think it's just because I watched a podcast on optimistic and pessimistic people. And some people are just naturally more pessimistic, or like, oh, I can't do that, or setting up a business, oh, that's hard, that's not for me. But I'm just the opposite, like, oh, okay, we can do that, that's easy. Yeah, just learn. Like, I built half of this house, just renovated it, just learning on YouTube how to do plumbing, how to do electric. Most people go, oh, we need a plumber, but you can be a plumber. You just learn it. You can learn anything.
So if trading fails, you can be a plumber.
That's basically my conclusion. Yeah, I'm going to become a plumber.
Well, I've thought about this a lot in terms of like entrepreneurs and stuff. I've heard it somewhere written, seen it, that most entrepreneurs are like Elon Musk, for example, completely delusional, arrogant. Yeah. But that's the only reason he's successful, because otherwise, you do need those people in society who like, I can do anything, I can go to Mars, and then they actually do it. But probably there's 100 people like him that totally failed because they didn't have the skills. They just believed they did. Yeah. And now who knows where they are. But it's funny. But it could also be an element of pessimism. It's like, well, there's nothing to lose. Everything sucks. By the time I'm pension, I'm going to be dead anyway. So I might as well take some big risks. Well,
there is that. But that's not the angle I come. Like my parents are always wittering on about pensions. I think pensions are a crappy investment. I had a friend that his pension fund went broke anyway, and he just lost all what he put into it. So it's still a risk, isn't it?
What happened there? Because I've been thinking about that. I've not got any preparation. I have no idea. And people say to me, "Are you crazy? You need to start thinking. You need to start putting money in." But my thinking was also like, that's a risk, that's a trade. Like, I don't want to put money in something that I don't know where it's going and it could get lost. I'd rather be responsible for that loss myself,
This is where my optimism is a disadvantage if I don't actually achieve anything.
But I don't know. It's funny that you said that, though, because I've had the same kind of thoughts. And also, I think it's definitely an ego thing. Like, when I tried stand-up comedy in Eastern Europe, and then like when I've played music and stuff, there's always a thing in the back of my head where I'm like, wow, maybe if I have a talent and I do well, maybe I could not necessarily, it's not about being famous or anything, but it's about like being successful and making a lot of money and whatever. So there's always that thing, and I have that performance-based thing too. Like I'd rather make it or lose it based on me, not just grinding away and just being mediocre. Because at the end of the day, if you fail, that's what you'll be. so you didn't lose anything.
Yeah.
Maybe you lost a bit of salary because you were trying.
Yeah.
But yeah, I mean, obviously the biggest risk is if you fail, then how are you going to feel? Probably not so good.
Yeah. I don't know if
And
it's
I like the term that the term for that is "fuck you money."
yeah.
Right? Like that's what it is. It's the ability to say, "No, fuck you. I don't need that job. Fuck you. I'm not going there." I
But
mean, obviously, it would be yeah.
it's all about kids, I think. Like if you haven't, if I had kids, it comes back to kids. If I had kids with Layla, I would look to get a more regular income. I'd have to. It's hugely expensive. I think you got school, you got clothes, you got food, you got the time it takes up. I think I just don't see why people have kids logically. I think it's I don't know. We're getting onto a very different topic here. I saw I don't know if you've seen Love on the Spectrum. It's a Netflix series where autistic people go on dates, and normally it's I think I've got a hunch that normally it's women that want push for kids harder than men. Would you agree with that? I'm not sure. I think it's generally, it might not always be the case, but the maternal instincts and everything, and certainly the clock is ticking, so they want a faster deadline. But generally speaking, it's the woman that pushes. I think it's an emotional thing. Obviously, someone has to, otherwise the human race would die out. But then you get these autistic women, and they talk like I'm talking, say, no, I don't want kids because they are incredibly expensive and they would take up all of my time. They're just thinking logic. And they're women and men, and they're all kind of thinking like this. So it's the kind of like emotions that make you want kids, isn't it? It's not the logic, rational. Why would you want to not have sleep for a year or two, or not lose a huge amount of your income, be forced into employment for 18 years because you've got to pay for college fees as well and school fees, and you can't just neglect your child. A lot of people do, but I wouldn't. So I would feel it's a huge burden. And if that happened, I would have to go and get a fucking job. But I'm very careful. I'm very fucking careful.
I like this idea though. Autistic people going on dates. That's definitely something you would watch. Maybe we should start a TV show like autistic people taking trades and see until we can get the freakiest, most crazy person to just trade like a robot.
I would like an autistic friend.
So you're a trader. You're in a trade based on your analysis, but then suddenly a breaking piece of news comes out and it has a big impact on your trade. You don't understand the news and you don't understand which way it will impact your trade. Will you just trade around it and continue with your original analysis, or will you just close your position?
Well, first of all, because I'm trading small time frames, it would probably just stop me out anyway, because I've got tight stop. But I would try to. I'd wait for an invalidation signal, basically. Which, if it doesn't invalidate, I wouldn't close it. Sometimes my invalidate. Yeah, that's basically my answer. I'd wait for an invalidation, but it's hard to do because like I say, it would probably stop me out if it was a volatile.
Yeah, so you wouldn't do anything, right? You just continue trading your position with the original stop and profit target.
Yeah, in fact, trading around news is a topic in itself, I guess. Like, I used to I've always got the calendar up, so I know when numbers are coming out, and I used to just avoid trading. But after a bit of back testing, I've realized my setup still happens when the news is released, but it just happens very quickly. It kind of spikes up really quickly, hits my entry, then spikes down, then it could hit my exit, and then fucks around a bit more. But the resting orders, or maybe the liquidity maybe is still in place for my trade to play out, but I just couldn't do it fast enough. Sometimes it's the news comes out and it's just as it's like five. I'm thinking like, oh, I want to get in this position, but it's 5 minutes until this number. I'm a bit scared to get in now. But recently I've been kind of just leaving it because the news is actually the catalyst that combines with my setup that makes it work almost. It's like, yeah. So yeah, I don't know. What would you do? Would you do anything differently? Do you think?
No, I think the correct answer is you stick to your original. I mean, because either it just spikes and stops you out, or it goes in your favor and then you trade the original trade. So
It's kind of what happened on my trade that I talked about before, where it did spike and stop me out. I think it was a week ago on Friday with the Bitcoin. Some news came out, but then I was out. But then the volatility started slowing down, and I re-entered because I saw an entry set up, and it hadn't invalidated yet. It was just a massive wick, and it closed within the trend. So I re-entered. But yeah, all right. I'll ask you this question.
all right.
I've been thinking hard about this question. I don't know where I got it from, but how many monitors does a professional trader need?
0.
Zero. Just
I don't think. Well, you don't even need yeah, in theory, you could trade. If somebody just shouted out the prices to you over time, at certain time intervals, you could trade that, But obviously, yeah, I think one. I don't think you need more than one screen. Probably in theory, I would even argue that if you're a long-term swing trader, you don't even need a laptop or a screen. You could use your phone. And that's crazy because people say don't trade from your phone or whatever. But if you're taking long-term positions, then what are you looking at? You're looking at the price and whatever. So that's all you need. You just need that information to be transported to your brain. It doesn't matter how you don't need 500 monitors.
Well,
If you're a day trader and you have algorithms running in multiple markets, yeah, maybe you need 5 screens, but otherwise, no.
one thing I would say is, no matter how many monitors you have, it's not going to help with your risk management or discipline or mindset, is it? That's not going to help.
No.
Maybe,
Although, I mean,
that's more
yeah.
important than looking at correlated markets or anything like that.
Yeah. Yeah, I guess people want more monitors because they think it makes them more professional. And it would make sense at some point if you're if you're a hedge fund manager and you're trading multiple markets, but at that point it's more like just to track what's going on rather than to make decisions. It's not like having an extra monitor is going to help you make more optimal decisions. Most likely as a newer trader, it's going to hinder your decision-making process.
Exactly.
So it should be simple, and less monitors is more simple.
And I think a lot of retail traders, they like the idea of being a trader and having multiple monitors. Like, it's almost like a flex. They're proud of their setup, right? And they take photos of it and show it to their friends. It's like a classic car enthusiast or whatever, showing off his cars. It's like, look at me, I'm a trader. I don't know. You could, yeah, not for me. I mean, I've got 3 monitors, but I only use one chart in one monitor. Yeah, I don't know. I think it's an interesting question. I think that's okay. I've got another funny question here. Would you rather have a guaranteed profitable strategy in your lap, maybe because you just joined a prop firm or whatever, or a professional risk manager to monitor you 24/7 and you can discuss things with, review trades with?
For me, it would be the risk manager because I'm happy with my strategy, but I need somebody, or I would like it if I had somebody other than myself dedicated to tracking me and pulling me back when I need to. So that's my biggest weakness.
Yeah, same here. I think this, like we said before, strategy setup is cheap, and you need to develop that by yourself anyway. Even if you did get one in your lap, you wouldn't necessarily just be able to trade it because you got no trust in it. But yeah, managing risks and debriefing sessions is very important, especially in the early stage. Maybe strategies is good for more developed traders that already have their risk nailed down and they want to work on breadth of trading. So they want to have more opportunities and they're already very disciplined. But yeah, first you need to work on that consistency. Yeah, well done, you passed. It feels like it's like an exam or
All
something.
right.
Well, we
Can I
both got the
join the
same.
prop firm and get the trading strategy now?
Maybe we've got to do an autism test first.
All right.
You need to be autistic. And yeah. I've got another kind of question here.
Okay.
I don't know if we talked about this before. Describe a day in the life of you, your future self, when or if you are a seven-figure, multi-million-dollar trader. What would you do with your time? And yeah, what would that involve?
Stroking prostitutes on a yacht, my friend. It's very simple.
So you wouldn't have any
No,
routine. When would your trading session fit in, or would you just not stops now?
I think at that point I'd be living a completely different life. And I always dreamt of having a hedge fund, running a hedge fund. I think it's a fantasy, but I would like to even, I think actually I would be good at managing traders more than trading. I think because that's a trade in itself. But I honestly believe I'm good at noticing talent. There's been a few cases where maybe it doesn't translate to trading, but I've discovered a band or a musician. Like I discovered Ed Sheeran, for example, way back when he released some video where he's doing like he had a loop pedal and he was doing a track, and I was like, this guy is gonna be fucking huge. Like, and if it was a trade and I could have like invested in him, if he had an NFT or something, I would have made a killing. But I think I'm good at that. I can like read people and know if they have something, if they have that X factor or whatever you want to call it. So yeah, if I was a multi-figure trader, I don't think I'd be trading anymore. I think I'd be running. I'd be like doing some, investment pieces, like looking at long-term trends and then passing it on to traders, and they would be trading the market day to day.
Yeah.
So more bigger picture again, but that's just because it's what I enjoy.
Yeah, it's something I thought about as well. One of the things I wrote down, you got more time to kind of enjoy life, help others. Maybe that's the time to start a family. I don't know, but I I would have a lot of freedom. And at one point, I would make is maybe it would actually make you a better trader as well, because you could be so you just let the trades come to you. You don't need to force anything. No rush, dude. You've already made it. You've got your yacht. The market's not good today. I'm taking the day off. It'd just be more of that, wouldn't there? Which is very good. Rather than I've got to make money, got to pay my bills. So you might even, that's why I'm hoping you kind of break through a barrier where this is moving on to something slightly different. But certainly in my trading journey, I've had periods of consistent progress and then blow it all because I size up or whatever and go into a different gear. But if I'd been playing this, I need the size and the consistency together, I would have that forever now. I would just be like chill, I'm just going to take one trade a week. I don't need to force anything. I've just made $500,000 in Q1. So why force anything? It's another point I remembered as well. I wrote it down. It was going against conventional wisdom rather than, because everyone says let runners run to make more money. You've got to let something run to get those really big winners. To increase gains, size more or trade more instead of holding winners. I don't know.
Well, okay, on that note, I've just been doing some kind of back testing, looking at my results. I'm in a drawdown from the last few months, like 5x. But if I took profits at the new element that I'm looking at, my like news equilibrium levels, if I just had a simple rule where I just take 100% profit at that first level, I'd be up 13R
Yeah.
or 13x.
Yeah.
And now I'm even thinking like, well, is there a way to optimize that? Like, that's not the way I want to trade. I don't want to just be like I take half and let it. I want there to be something there, like maybe it's the environment factor where if I think there's a huge, the environment is so juicy that there's a chance that I'm going against sentiment and it could run and it could be repriced, then I leave it and I accept and I give it all back. But otherwise, day-to-day trades, I just take profits because these drawdowns are getting too much for me. Like they destroy me psychologically. And knowing that I'm still making the good trades, it's just I'm still, I don't know, is it greed or what? Have I frozen?
Yeah.
Can you hear me though?
Yeah, you're back.
Okay.
You're back.
I don't know why, but I'm always shooting for the home run. Like,
Yeah, this
maybe it's not very.
This is the point. This is the point because this is what I was thinking about. Like, why go for a home run? You can make a lot of money in a small move if you size it hugely. See what I mean? Just have a huge size. Because it's not the distance that the price moves that makes your money. You can control it by sizing higher. Literally, this goes back to our point about good traders always knowing when to put size on, and when not to. And that makes a lot of sense. Like, in my Q1 when I was, doing very well, I could do that again, but with bigger size. I've just been more frequent now. I'm trying to trade more, and I'm trying to make it run for longer and add when I shouldn't be adding. And no, I can make plenty of money just doing what I was doing. It's like this goes back to my theory about just add a couple of zeros on, and you would have been, doing well. And yeah, it doesn't have to run. So there's a lot of stuff where you question conventional wisdom, like you got to have a runner, or it can make your yearly trade. I mean, there's different ways to trade, and sure, and your Christmas trade was a bit of a runner. And if you took profit early then, your institutional level, maybe you wouldn't have made as much. But and also about stops, there's this question like, I
just wanted to say that the thing about the institutional level is an interesting way of calling it. I wasn't calling it that, but the point is on that trade there was like no level. That's the point. That's why at the time it gave me some confidence that I didn't understand. And now when I look back, I'm like, okay, the next level, it was like an open gap. So I was like, I don't know, this could just run, right? So it's almost like when there's a level, then I should be taking profit. If there's an open field, I should be letting it run and reprice.
Yeah. It could be, you could be onto something. I mean, you need to see it again. And but yeah, with going back to stops, my strategy actually, I have a hard stop, and I'm sure all professionals have a hard stop somewhere. Well, it'll be when their account is blown, probably, or before then, hopefully. But there'll be like, the question is like, it kind of blows our mind to think about not using stops, but I guess I do something similar, because I don't know if you remember me saying, like in Q1 I have a hard stop, but it's way out, it's very wide, because I have a way of playing my trade offside. I have a way of playing it onside and offside. So if it does exhaust and it is playing out, I've got a plan to play that. If it goes through the level, it does not exhaust, and in fact more volume comes in to push it with the trend, the prevailing trend, so it's going against me, I've got a plan to play it offside before it hits my stop, because I've got another level that it usually rejects, and then it, like I say, it back tests my entry, and that's when I get out. So, and this is why I keep saying this is what drives markets, because I'm a trapped trader now, and I just get out when it pulls back. So I could potentially develop this strategy where I add to my loser. So it blasts through my level, and I just add the same size so I can get out at a profit at my entry. You see what I mean? This is what kind of working an area is. I don't know if I'm making sense there, but